Monday, the 6th of May. There's been a lot of action in the yen pairs lately. The Japanese Ministry of Finance looks like they intervened in the markets last week to support the yen. And I've had a look at some longer term charts, and I've realized why the Ministry of Finance might now be panicking. Because if the yen weakens any further, it could trigger some colossal selling. This actually might be the biggest Forex trading opportunity I have seen in my near 40 years of trading. So pay attention. This is really important. Okay, so I'm going to run through some yen pairs and show you what's going on the longer term charts. This is the New Zealand dollar versus Japanese yen. And this only goes back to 2020. I say only, that's still 4 years. So the yen has been in a decline against the New Zealand dollar for 4 years. And it's a pretty strong decline. You'd have done well if you were long the New Zealand dollar versus the Japanese yen. Now, there's no indication that that trend is going to stop at the moment, despite the intervention from last week. We still have on the daily chart the price trading above, well, it's holding on to the 100-day moving average as support. It's trading above the 200. The moving averages are all pointing higher. We've got a little bit oversold now on the daily chart. So there's every possibility that the market will turn around and go up from here. The Ministry of Finance is not going to intervene week after week after week. It would be far too expensive for them to do so. They tried to draw a line in the sand and say, right, we don't want the yen to overstep this mark, but that doesn't mean they'll be successful. They have tried that times in the past. I remember at $150 yen, they tried to hold it back. And of course, eventually went up to 160 where there was intervention last week. Now, this is what's important. I'm showing you the daily chart. I'm now going to move to the monthly chart. This is quite brightening. This is the monthly chart. New Zealand dollar versus the Japanese yen. Now, this goes all the way back to 1988. In fact, I started my trading career in 1987. So it pretty much spans the whole of my near 40-year trading career. And throughout that whole time, basically the New Zealand dollar has gone sideways against the Japanese yen. This trend line here, which is around, shows you clearly the upper limit to that range. Now, you can imagine that if we start to break and hold above 9600, this could trigger a lot of buying, longer term buying. Just looking at this chart alone, putting some Fibonacci levels on the 23.6% Fib, which could reasonably be the first target, is up at 135. So from 96 to 135, this is 40 points or 4,000 pips. And that would be just to the first longer term target. So this really could be a huge opportunity for speculators or investors, and it could be a massive problem for the Ministry of Finance if we start moving above 9600. And 9600 is only 400 pips away. Right. Now, when you look at this chart, this is the euro versus the yen going back to 1919. Okay. So that's a good 34 years. Now, we've already broken above here, and I missed this. So I'm not looking at my monthly chart as often as I should do, because this is a very, very clear breakout for the euro yen. The break above, let me see, what was the trend line value? Around 145. Now we're up at 165. So we've raced 20 points higher, 2,000 pips higher from the break point and the 500-month moving average. You know, this is really very bullish indeed. So basically the euro yen rally, longer term rally, has already started. And we've already achieved 23.6% Fib target of 164.00, and we're moving above that now. So according to the monthly chart, at least, there is really no stopping the euro from pushing significantly higher against the yen. I'm just going to take it down to the weekly chart and just have a quick look. Yeah, I'm in the weekly chart. The moving average is very, very strong. Prices moving aggressively away. We did have a bearish engulfing candle on the weekly chart after the intervention last week from the Ministry of Finance. Now, that might trigger some losses, which would, for me, offer buying opportunities. So I'm going to keep an eye on that. I'm going to keep my subscribers updated and give them buy levels on the way down. Look at this. Look at this for the dollar yen. A descending triangle that started back around 1990, and we had a breakout in April 2022. So this breakout is actually 2 years old, and we've broken above the 500-month moving average for the dollar yen and pushed higher from there as well. So this really, when you look at it longer term, it's no wonder the hedge funds are so short the yen. I'm sure they're looking at these charts and thinking that the yen could weaken significantly, even if I just take this peak from 1970, and I'd like to go further back, but obviously I don't have the data. we have a 38.2% fib of 164.26. So that's 11 points above where we are now. That's 1,100 pips from where we are now. So that is a reasonable target. Obviously, this does look like the dollar will continue to rise against the yen, despite the intervention last week from the Ministry of Finance. Now, on the weekly chart, we do have this bearish engulfing candle, which suggests that the Ministry of Finance did a great job taking out 2 weeks of gains. This is it is a negative candle. It does indicate that the short yen speculators are getting hurt because the yen has risen significantly against the dollar. The dollar's fallen back. So it could trigger further losses, but that I think would be good for us in the longer term. There's a lot of buying opportunities in what is a very strong bull trend and in what really looks likely to continue to be a bull trend in the weeks, months, and even years ahead. Okay, this is the Australian dollar versus the Japanese yen, and this is actually representing a really good opportunity right now. You can see on the chart going back to 1990, just as the other charts we've shown, we have broken above the trend line, which is at around 96.50. We are trading at 101.60. So we're about 500 pips above the trend line, but it doesn't look like a big deal on the monthly chart, does it? We could easily be going to 150, which is the first target, 23.6% fib, the first longer term target. So that is basically 50 points or 5,000 pips. Now, obviously, it could take several years to get there. It could be 3, 4, 5 years to get there. But this is a tremendous longer term opportunity if the charts are to be believed. And when you consider that we've broken above the 500-month moving average and a trend line that goes back nearly 35 years, this is a very, very significant breakpoint. And the trend line, it was effective at holding the market back in 2 years ago and again last year in 2023. So it is a very important trend line. And the fact that we've broken above it and held above it, and we've, on a monthly basis, we've only just broken above it. We've spent 2 months above the trend line and just started to move higher. Let's have a look at the weekly chart, see if we've got anything that indicates that we might have a pullback for a buying opportunity to the trend line. We don't have a bearish engulfing candle on the weekly chart for the Aussie yet. So maybe this is one of the stronger pairs right now. We've seen weak bearish engulfing candles on a couple of the other charts, including the dollar yen. We haven't seen that here, but if we got to anywhere near 97.00, 96.50, that would be a tremendous buying opportunity. I doubt we'll see it, but keep that in mind. Canadian dollar versus the Japanese yen. We do have this bearish engulfing candle on the weekly chart from last week. We took out the previous week's significant gains. You can see a big green candle there. We've taken it out and we're holding below the low of that candle. So in the short term for the CAD yen, it looks a little bit bearish. And if you were not looking at your longer term charts, if you're only looking at the weekly chart, you might think that we've just seen a peak and we're going to see the market collapse based on that price action. Now, it could happen, but when you look at the monthly chart for the Canadian dollar versus the Japanese yen, you see this big symmetrical triangle pattern, and that goes all the way back again to sort of 1990. And we've been just trapped, mostly moving sideways. Look how we held the 23.6% fib for quite a long time, tried to peak above it, came back down. Now it's acting more as a support area. The trend line comes in at 14.5. I'm going to call it. We try to break above there, but the Ministry of Finance intervention has pulled the price back down. But judging by the other charts where we already have breakouts, you wouldn't want to bet against this market, would you? I think eventually we will break higher. So it's worth keeping an eye on it around the 114.00, 114.50 area. And if we do start settling above there in the days or weeks ahead, that could be a very significant buy signal for the pair. 122.41 would be the first target. Well, that's 10 points away from where we are now, not far at all, 1,000 pips. We get up through this area, 125.50. So that really is an important area around 122.50, 125.50. Get up through there, and we could be looking at peaks around here, 137.20. So on the longer term charts, this really does offer an opportunity. Being short the yen could offer significant profits in the weeks, months, and even years ahead. If you want to keep track of these moves on a daily basis, then you're going to need my signals. I'll put a link in the box below so that you can sign up and get signals. Last week, we had profit potential of 2,700 pips. Now, I'm sure most of the subscribers did not actually make that much because you'd have had to run every trade to its ultimate target. And even I didn't manage to do that. There were 2,700 pips in the table. But even if you only took 20% of that and you managed to get 5 or 550 pips, that is a phenomenal week for most traders. And I personally certainly would be very happy with that kind of profit. So if you want to get the signals, sign up, click the link in the description box, and we'll get you in the private members group.